GameStop is an American company. It was on the verge of bankruptcy, but its shares suddenly shot up by 2,000%. 2,000% in 4 days. So how did this magical turnaround happen? Not because the company suddenly began doing well. This astronomical jump was driven by a group of netizens who were out to teach the bankers at Wall Street a lesson. And our next report tells you what a financial rebellion looks like.
25th January 2021. One share of American company GameStop Corp was selling at close to $43. 28th January 2021, the price shot up to $469. That's a whopping jump of more than 2,000% in 4 days. What happened? GameStop is one of the world's biggest video game retailers. But on Wall Street, the market for GameStop stock is a battleground. The battle is between financial elite and small investors.
On Wall Street, you have some hedge funds that are active in what's called short selling. So these are companies who, instead of betting that a company is going to prosper in the future, they think it's going to do badly, and they think that the stock's going to fall. And there's a way for investors to make that kind of bet. It's called selling short.
That's exactly what some of the major hedge funds wanted to do with GameStop. Bet on the decline of this company to make money. In other words, selling short. But these Wall Street traders got torched by this trade. Short sellers lost more than $5 billion betting against GameStop. This includes names like Point72 Asset Management that lost nearly 15% of its fund over this trade. Andrew Left's Citron Capital suffered a loss of 100% over the GameStop trade. Melvin Capital needed a $2.8 billion injection to save itself. These big traders were defeated at their own game by small traders. It all began here, Wall Street Bets, an internet forum on Reddit that decided to teach Wall Street a lesson. Online traders, mom-and-pop investors, and small brokers here decided to buy GameStop shares. For many of these traders, this was about punishing Wall Street for the financial collapse of 2008.
When the big man, when the quote-unquote suits don't get their way and they start losing, they just shut down the game and change the rules. I think it's extremely unfair. At this point, like I said, I don't care about what my financial return is. Now it's about sticking it to the man.
An army of small investors pushed the stock to record highs, leading to a massive jump in GameStop's market value from $2 billion to $24 billion. While the big investors saw the money they bet against GameStop evaporate.
Well, it played out that those who are pushing the share prices higher are on the winning side, but those hedge funds that are short the stock, that believe that the price will be going down, are getting squeezed. And so the concern is that maybe we end up with some hedge funds that have financial difficulties.
The volatile trading led to high drama, forcing the Biden administration and the U.S. Securities and Exchange Commission to start monitoring the situation. Robinhood, the app used by many of the small investors to buy GameStop shares, began blocking buys from fresh purchases. Some American lawmakers have now demanded an investigation into this halt. The bet against GameStop has left Wall Street traders burnt. The entire affair is a reminder that market investments remain risky business, and even the best in the business are not immune to it. Bureau Report, WION World is One.
Co-presented by Skoda. Simply clever.
WION is now available in your country. Download the app now. Get all the news on the move.